Welcome to the deep dive. We're tackling Turcas Holdings Q3 2025 results today. The goal: to cut through that dense holding company report and give you, the individual investor, the clear insights you need.
Exactly. And with Turcas, it's sustainable based, on the bourse since 92, but you're not just looking at the holding company itself. It's really about the performance of its two big 30% stakes, energy and petroleum.
Right, those two pillars. First up is Shell and Turcas Petroleum. They're a major force, right? Leader in sales per station. And they had, a 28.2% gasoline market share in the first half of 25?
Huge dominant share.
Yeah.
And the other pillars, RWE and Turcas Guni, RTG. That's the big 800-megawatt gas power plant down in Denizli. So you've got that retail fuel dominance and then the large-scale power generation.
Okay, structure-wise, Aksoy Girişimcilik Enerji ve Tourism holds the reins, 54.45%.
That's the controlling stake. And about 35.8% is publicly floated.
What's interesting, though, is the holding company itself. It's tiny, just 37 people.
Very lean. And impressively, 16 of those 37 are women. That's 43%. Quite high.
That lean structure really underscores the holding model, doesn't it? The subsidiaries do the actual work.
They do the heavy lifting, exactly. But lean doesn't mean low cost at the top. Board and senior management compensation for the 9 months, indexed, of course, was around 57.77 million TL.
Okay. Let's get into the financials. But first, that context point is crucial. Inflation adjustment.
Yes, vital. They're using TMS 29. All these numbers account for Turkey's high inflation, 198% over 3 years, cumulatively. So we're talking real growth, not just nominal figures puffed up by inflation.
And that context matters because, well, here's the puzzle. Net income was basically flat, up just 1% to 805 million TL. But how? How is that possible when the core operating result, the İsas Faaliyet Karya, swung into a massive loss? Minus 274 million TL, that's a huge negative swing.
And that's the classic holding company situation. Turcas' own operations lost money. They were saved, essentially, by the investments. The share profits from equity investments jumped 67% to 822 million TL. Stiash, the fuel business, was the hero. It brought in 970 million TL profit. That more than covered the 148 million TL loss from the RTG power plant.
Wow, okay, so profitability is totally dependent on the subsidiaries' dividends, mainly CASHO. What does that structure mean for the balance sheet, then?
Exceptional strength.
Yeah.
I mean, really exceptional. They have zero financial debt. Zero. It's a net cash position of 438 million TL. And that equity to asset ratio.
Yeah, I saw that. 99.78%. Is that even real?
It's real. And it's almost unheard of for a listed company. For you, the investor, it means incredibly low financial risk. Very, very conservative.
And that conservatism plays into FX, too. They have a net foreign currency asset position.
That's right. About 334 million TL equivalent. It acts as a natural hedge. If the lira weakens against, say, the dollar, the value of those assets on Turcas' books goes up. A 10% move in the USD, for instance, has roughly 18.6 million TL to their profit.
So super stable balance sheet, profits driven by STAS.
Yeah.
Are they just sitting on that cash then? Or investing?
Oh, they're definitely looking forward, signaling growth.
How so?
Well, two key things. First, RTG, the power plant operator, just approved an $8 million investment in a 20 milliW solar project, a hybrid GES. That's expected mid-2026. So they're diversifying their power generation beyond just gas.
Okay, interesting. Solar diversification. What else?
Turcas itself formally changed its title to Turcas Holding S during the period, cementing that role. And they've established a brand new separate company minimum capital A, specifically for future investments, both domestic and international. That signals intent.
Got it. A dedicated vehicle for growth. And meanwhile, the cash keeps flowing from the existing assets.
Absolutely. Just after Q3 ended in October, ST declared a 1 billion TL dividend. Turcas, the 30% share. That's 300 million TL straight into their coffers.
Right, so summing it up, incredibly strong, debt-free balance sheet thanks to the holding structure. But profitability, for now at least, really hinges on Stage continuing its strong performance and paying out those dividends.
That's the core picture, yes. Solid foundation, but reliant on that main subsidiary's cash flow.
Which brings us to our final thought for you. They've set up this new company specifically for growth. They have the cash. The provocative question is, where do they go next? What new sector, or maybe even what new country, might Turcas target to deploy that capital, moving beyond just energy and petroleum? Definitely something to think about. And don't forget to like, subscribe, and share this deep dive.